Stocks close mixed on Wall Street. The Dow Jones and S&P 500 correct, while the Nasdaq closes with some gains. Stocks in the Asia-Pacific trade mixed. The GIFT Nifty is indicating a strong gap-up start for the Indian market. Crude prices slipped for the fourth straight session. Brent near a 5-month low of around $77 a barrel on a stronger dollar and underwhelming production cuts announced by the OPEC. The RBI's two-day Monetary Policy Committee meet gets underway today. The CNBC TV 18 Citizens MPC expects the RBI to leave rates and stance unchanged. Growth forecasts, however, are expected to be revised higher. The Congress party picks Revanth Reddy as the next Chief Minister of Telangana. The swearing-in ceremony will take place on the 7th of December, with Revanth Reddy likely to resign from the parliament later today. And severe cyclonic form Migjuan makes landfall on the Andhra coast. Over 61,000 people are shifted to relief camps, while large parts of Chennai remain waterlogged and without electricity after heavy rains left at least 9 people dead. The Chennai airport has resumed operations. Good morning and welcome to Power Breakfast. I'm Pavitra. Those are the top headlines that we have for you this morning. There's a lot to talk about. The handover in terms of what we got from the US has not been too positive. It's pretty mixed right now. And on the back of that, you have most of the Asian markets trading mixed as well. Remember, for the last 2 days, Asia has not been doing very well. The Japanese market has seen quite a big cut come through, but today it is reversing that. It's seeing an over 530 points higher on the Nikkei markets. So that's clearly the one which is doing the best this morning. You have Taiwan and Seng both trading with some gains as well. So the Taiwanese index is currently up around 0.4%, and Seng, like you can see, is just around 0.3% higher right now. Largely higher there. There are some markets. Kospi is absolutely at the flat line. Straits and Shanghai from the Asia pack of markets are seeing a bit of a cut come through. It's not too significant at all, but seeing a little bit of red to start things off. The GIFT Nifty will come up for you, and get this, after those 2 solid sessions, once again it is indicating that the start for our own markets will be very strong, 92 points higher once again. So this market is in no mood to stop this big momentum that we have been seeing. So that is the shape of Asia right now. But let's also bring you cues from Wall Street. It was quite a mixed close, like I mentioned. So the Dow slid around 80 points. The S&P 500 was pretty much at the flat line, just around 2 points lower. And the tech-heavy Nasdaq, that is where we did see some amount of gains come through, around 44 points higher, because a lot of the tech stocks came back after the cut in the previous session. Now let's shift focus to some important data points that we're tracking from the US as well. Job openings tumbled to 8.7 million in October, and this is well below what was forecasted. So the estimate that the street was working with was around 9.4 million. That's why this 8.7 is significantly lower than that. This is actually the lowest level that we've seen all the way since March of 2021. Meanwhile, in reaction to this, you also saw the US 10-year Treasury yield slip below the 4.2% mark. This is for the first time since early September. We have CNBC's Michael Santoli to break down all of the details of this key US data for us. Mike.
The job openings number badly missed estimates. If you want to say a downside surprise is missing estimates. But, of course, that's what, in a sense, the Federal Reserve wanted to see. It was almost 600,000 jobs that were not listed anymore. This is another component of that survey, which is the percentage of layoffs in a given month. So you see it's been really low. That's the orange line here. Rock bottom through the pandemic, and afterward, it's blipped up a little bit to around 1%, but really still below pre-pandemic levels. So it's not really about employers shedding workers at a rapid rate. And you see the unemployment rate, the official unemployment rate, has just barely curled higher and generally tracks this number. So if this remains subdued, we can hope that the unemployment rate also does. So we have almost that sort of perfect combination of a labor market back in balance, because it's not that there's too much demand for labor, but people are also not yet letting people go. It could change. It could be a lagged effect looking into next year. But for now, pretty benign numbers.
All right, Mike, thanks a lot for getting us all of that important data. But with that, let's also listen into some important opinion coming in from market experts on their outlook in terms of the US market action.
The theme for next year is tempering expectations in 2024. I do think overall we have a pretty benign outlook for the economy itself, but when you've had a 20% rally this year, when you've had elevated valuations, and when earnings expectations for next year are in the double digits, when we can probably achieve something about half of that, just given what we heard in the third quarter from CEOs, gloomy outlook. Remember that disinflation helps markets and margins. It doesn't help revenue. So we worry a little bit on the revenue side as to what companies can produce. So if you put all of that together, we need to be a little bit less optimistic, I think, than many in the marketplace are right now about next year, especially because what we've seen in November is very much a sentiment rally, not a fundamentals rally. It's been driven by multiples. We've seen a collapse in bearishness if you look at the AAII investor sentiment survey. So I think people are getting a little bit exuberant about finally having some relief from the Fed, but we have to think about what that actually means next year.
Baseline forecast is modest upside because valuations are pretty high. Earnings are going to grow roughly 5%. But there's a tail scenario, which is if rates stay low, and rates have dropped really significantly. Real 10-year bond yields were 2.5% at the end of October. They're now roughly 2%. It's a very significant decline in a short period of time. Stocks rallied 10%. Roughly in the last month. And so to the extent that rates continue to fall or stay at low levels, that could support an S&P 500 level close to 5,000. Assumption is that real 10-year bond yields will be closer to 2.25% at the end of next year, a little bit higher than we are now. And that supports our 4,700 targets, a baseline forecast. As I said, there's a scenario where you could have market rise even more, closer to 5,000 if you had rates continue to fall.
All right, that is the word coming in on the US market. But let's also bring you the final update in our global market wrap this morning. We have pretty mixed cues coming in from Europe as well. So if you look at it, the French CAC index ended around 54 points in the green. The German DAX was, it actually hit a record high. It was up around 120 points at the close. And the FTSE did see a little bit of red, so that was down around 0.3% as well. By the way, speaking of the DAX index, for this year so far, it's almost 19% higher, and it significantly outperformed, some of its peers. The Stock 600, for example, is up just around 10%. You have the CAC index, which is up just around 14% for the year as well. So in that context, the German index has really outperformed. That is what we're tracking in terms of the global market action. We do need to get into a short break, but on the other side, we're going to talk about how all of these global cues really impact our markets and the stocks that you should watch for in terms of the India market action. Stay tuned. We'll be right back. Welcome back. We've gone through the global picture, but let's now talk about how things are looking for our own markets and everything that you should watch for from a domestic standpoint. We have all of our research team here to take us through the trade setup. Mangala and Vivek Hormaz are joining us now. Guys, a very good morning to all of you. Vivek, we were just going through the kind of uptick that we're seeing on the GIFT Nifty. This market is in no mood to stop.
Well, you're absolutely right. And I think that is going to remain the key question today, whether, the two-day stellar rally, can it sustain? Yesterday, remember, in the middle of the trading session, you did see a brief intraday dip, but that was bought into very quickly. And, all of the indices yesterday closed at record high levels. Along with that, the key factors to watch out for. Number one, banks, continued the outperformance. They've ended their underperformance quite decisively. Can that particular trend continue? Capital goods and power stocks, these are three of the key sectors that actually led the outperformance yesterday. IT stocks took a breather, and pharma stocks too hasn't participated in this particular rally. So that'll be something important to watch out for. Along with that, crude oil prices yesterday, dipped further, down almost 1%. And when you're talking about Brent prices, hovering around the $72 a barrel mark. Overnight cues, while not very encouraging, Asian cues as well as GIFT Nifty cues indicating a gap start for our own market.
Okay, gap up start. Let's see whether that sustains or not. Vivek, thanks a lot for that. There's also been a lot of stock-specific action ever since the market closed yesterday. So, Hormaz, fill us in with the details.
Well, absolutely. And I'll start off with Bank of India. It's a CNBC TV 18 newsbreak confirmation where the bank launched a QIP yesterday. The floor price is set at 105 rupees. But sources are further telling us that it is a 4,500 crore QIP with a base issue of 2,250 crores and a green shoe option of another 2,250 crores. The board is likely to meet on the 8th of December to decide on the issue price and the allotment of the shares. Now, India Grid Trust has also launched a QIP according to sources. Now, that is a 550 crore QIP with a base issue size of 350 crores and a greenshoe option of another 200 crore rupees. The indicative price is set to be 127 rupees, which is a 2% discount to the floor price. Now, Sun Pharma, this news came out overnight, which said that it signed a licensing agreement with Aclaris Therapeutics, and under this agreement it has received exclusive rights under certain patents for the use of a drug which is used in the treatment of alopecia. Now, this drug was acquired by Sun Pharma after they made an acquisition earlier this year. Hindustan Zinc, the board meeting is today to consider its second interim dividend. Ashok Leyland, it will increase its stake in Optare PLC to 92.1% from 91.6% earlier, and it is making an investment of 62.9 million pounds or close to 660 crore rupees for the same. Green Panel Industries, the operations at the Chittoor facility has been affected due to the cyclone, and the company has said that they are taking all steps possible to resume operations as soon as possible. And lastly, Himadri Specialty Chemicals, this news has just come out where the company has decided to set up a manufacturing facility for lithium-ion battery manufacturing components, and the total project cost is set to be 4,800 crore rupees, which will be spent in phases over 5 to 6 years, and this investment will be made via internal accruals and the rest via debt. Back to you.
Okay, Hormas, thanks a lot for that. We're going to keep all of these stocks on our radar today. Finally, let's talk about how things are looking on the future side. Mangalam, not too long ago, we were talking about FII selling in this market. Look at it now.
Well, 9 days of FII buying in the cash market and more in index futures as well. If you just take a look at the texture of the market, right, the intraday charts of both the Nifty as well as the Nifty Bank come up for you on the screen. You see every dip has been very shallow and the bounce has been even higher. So yesterday, we opened lower, thereafter moved to a record high. From there, we saw a bit of a dip, about 100 points from the highs, only for that to be bought into for the Nifty and end at another record high, 20,855. And the Nifty Bank doing extremely well too, doing even better over the last 2 trading sessions. Importantly, the GIFT Nifty is suggesting that the start would be another 100-point jump start. So that is, something that the bears are probably stuck on the wrong side, and at the same time, the bulls who have not yet invested are waiting on the sidelines. So that'll be interesting to see where that goes. But the FIs, they've been continuously investing in our markets. Over the last 9 trading sessions, they bought nearly 21,000 odd crores in the cash market in 9 trading sessions. Yesterday was a big number as well, close to 5,200 crores. This is a trend that we have to monitor going forward too. In index futures too, yesterday there was a purchase of nearly 2,000 crores where they added nearly 17,000 long contracts and covered almost 5,000 short contracts. So that's telling you that, the net long addition is close to around 22,000 contracts itself. And as a result of which, the FII long exposure, which was around 34% at the start of the series, has now jumped all the way up to 49 odd percent. Importantly, the purchasing has increased even in index, the Nifty Bank futures. Day before yesterday, the Nifty Bank futures purchase was close to around 500 odd crores. Now, yesterday, that number has jumped by about 30% to 680 crores. And this is something that we will track as the Nifty Bank outperforms as well. Today, it is the Nifty Bank weekly options expiry, but the road to 21,000 for the Nifty has opened, and that's where we are seeing a fair amount of options action. So let's see where that comes about too. And on the lower side, 20,800 put has been extremely active. So 2750 would be an important support to watch out for, though dips, much shallower than that would be used by the bulls to buy into. For the Nifty Bank, 48,000 call has maximum open interest. At the lower level, 47,000 put is extremely active in trade.
Okay, Mangalam, thanks a lot for taking us through all of those cues and details from the market. With that, we do need to get into a short break. But on the other side, we're going to shift focus from equities and talk about all of the cues coming in from the commodity market. So stay tuned for that update. Welcome back. You're still tuned into Power Breakfast, and let's now get a check on how things are looking in the commodity space. Manisha joins us. Manisha, take us through the moves that we've seen overnight.
Thank you for that, Pavitra. I'll start with the crude oil prices, which are now trading at a 5-month lows. There are doubts on OPEC cuts, and Libya is also looking to increase production. The U.S. inventories have been on a surge as well, and the U.S. production trading at near all-time highs continues to weigh onto the prices. Is the reason you have seen both the varieties trade below $80 a barrel. Add to that Saudi Arabia also is looking to cut Asian pricing for the month of Jan in the first time in 7 months, and we are looking at weakening premiums across board because of the weak global demand as well. Remember, China's credit rating cut being Moody's is another factor that has led to decline, not just in case of crude, but in case of industrial metals as well. So when you look at all of these metals today on morning, whether it's copper trading at a 1-week lows, zinc trading at a 1-month lows, nickel prices have continued to underperform as well. So across board, most of the metal prices also have started Asia on a weaker note.
Okay, Manisha, thanks a lot for taking us through all of that action from the commodity space. But with that, let's also move on and bring you some important weather updates now. The severe cyclonic storm cyclone Migjuam that made landfall in parts of Tamil Nadu and Andhra Pradesh has since weakened. However, the aftermath of the storm has brought life to a standstill in several parts of these states. So at least 9 people have died from rain-related incidents in just the last 2 days. The heavy rainfall has also led to many areas being inundated, causing flood-like situations in these areas. The Met Department now is predicting heavy rainfall to continue in Andhra Pradesh today and has also issued a warning for Odisha as they forecast heavy rainfall in the state. Okay, some more important news coming in, and this is on the political front. Revanth Reddy will be the next Chief Minister of Telangana. The Congress, which won the Telangana Assembly polls, formally picked him as the leader of the Legislative Party last evening, and the swearing-in ceremony is scheduled to take place tomorrow. Reddy, who joined the Congress in October 2017, was appointed as the president of the Telangana Congress last year. And once sworn in, he will be the state's second chief minister after K. Chandrasekhar Rao of the Bharat Rashtra Samiti. Okay, so that is all the time that we have on this edition of Power Breakfast. We do have to wind down with the news that the Asian markets are pretty mixed right now. We have markets like Japan doing very well, but the real news is that once again, the GIFT Nifty for our own markets is indicating a near 100-point gap up. So it's definitely going to be a strong start. Let's see if we can hold on to that or not. Thanks for tuning in. We have Bazaar Morning Call up in 2.